$35 million. That's how much money is about to get absolutely destroyed if Kaspa breaks just one more penny higher. And right now, KAS is sitting at a knife's edge, testing the patience of every trader watching this chart. Bulls are defending support like their lives depend on it. Bears are blocking every rally attempt, and something massive is about to break. In the next 10 minutes, I'm going to show you exactly why this could be the most important week in Kaspa's trading history. Look, I've been tracking Kaspa's price action religiously, and what we're seeing right now is absolutely fascinating. KAS is currently trading at $0.088, down just 0.32% over the last 24 hours, but don't let that small percentage fool you. This market is coiled tighter than a spring. Every single time the price has dipped toward that $0.088 support level, buyers have stepped in aggressively. We're talking about institutional-level defense of this price point, but every rally attempt getting shut down hard at resistance. The 4-hour RSI is sitting at 44 neutral territory, but leaning bearish and volume has cooled off to 7.7 million compared to the explosive trading we saw back in July when KAS rocketed to $0.1187. But here's what most people aren't paying attention to. The derivatives data is screaming. Net shorts are dominating at 103 million, completely dwarfing net longs at negative 61.9 million. Open interest remains steady at 449 million, which tells us positions are still loaded, but confidence? That's wavering. Community sentiment, however, remains bullish as ever. Kaspa holders aren't backing down, and for good reason. We've got some serious catalysts brewing that could flip this entire narrative in hours, not days. Now this is where things get absolutely wild. Remember that Binance listing rumor that's been circulating? Pumpolinski dropped a tweet that has the entire Kaspa community buzzing. Apparently Binance has a mysterious page showing Kaspa to euro conversion rates with live pricing and links. Coincidence? In crypto, there are no coincidences. Think about what a Binance listing means for any altcoin. We're talking about instant access to millions of new traders, massive volume injection, and legitimacy that money can't buy. When Binance lists a project, price discovery goes absolutely bonkers. Just look at what happened to other altcoins after their Binance debut. We're talking about 200%, 300%, sometimes even 500% moves within days. But that's just the beginning. Zealous Swap just announced something that could completely change the game for Kaspa's ecosystem. They're launching an insurance fund backed by 5% of protocol revenue from both Zealous Swap and Fervent Finance. The fund holds LP tokens, KS and Zeal, creating a safety net that grows stronger as the ecosystem expands. Why does this matter for price? Simple. Institutional investors in whales care about one thing above all else: risk management. An insurance fund signals maturity, professionalism, and long-term thinking. It's the difference between a meme coin pump and a legitimate DeFi ecosystem that's built to last. And then there's the technical catalyst nobody's talking about. Kasplex smart contracts are launching in exactly 1 week. We're not just talking about another DeFi protocol, we're talking about a potential explosion in Kaspa's transaction throughput. Higher TPS means more network activity, more fees, more utility, and ultimately more demand for KAS tokens. But remember that $35 million short squeeze I mentioned? Every dollar KAS climbs toward 10 cents puts more and more short positions underwater. These aren't retail traders we're talking about. These are leveraged positions that get automatically liquidated when the price moves against them. When shorts start getting squeezed, it creates a feedback loop. Forced buying pushes prices higher, which liquidates more shorts, which creates more forced buying. Alright, let's break down exactly what the charts are telling us, because this is where the rubber meets the road. Since that explosive July run to $0.1187, Kaspa has been painting a classic reaccumulation pattern. We've seen a series of lower highs, which normally would be bearish, but the key difference here is that support at $0.088 has held firm through multiple tests. Each dip has been met with aggressive buying, creating what technical analysts call a spring, a false breakdown that actually signals strength. The resistance level at $0.103 is absolutely critical. This isn't just a random price point, it's been tested multiple times and represents the battleground between bulls and bears. Break above $0.103 with volume and we could see a rapid move toward $0.115. But the real target that has everyone's attention is that psychological 10 cents level where the short squeeze begins. Volume analysis reveals something fascinating. While daily volume has dropped to 7.7 million from July's peak levels, this isn't necessarily bearish. Low volume during consolidation often precedes explosive moves. Traders are waiting, positions are being accumulated quietly, and when the breakout comes, it's going to be violent. Now let's talk scenarios because every smart trader needs a plan for multiple outcomes. Bullish scenario: if KS breaks above $0.093, $0.095 with conviction, momentum could build rapidly toward 10 cents, $0.103. A clean breakout through $0.103 would likely trigger the short squeeze, potentially pushing prices toward 11 cents, $0.115. With a Binance listing announcement on top of that, we could be looking at a retest of the $0.1187 highs or even higher. Neutral scenario: the most probable outcome short-term is continued consolidation between $0.088 and $0.103. This range trading could persist until the Kasplex smart contract launch provides the catalyst needed for a definitive breakout. Patience will be rewarded here, as accumulation at these levels could prove extremely profitable. Bearish scenario: if the $0.088 support finally gives way, we'd likely see quick selling toward $0.085. A break below that level could trigger a deeper correction toward 8 cents, $0.075, which would actually present an incredible buying opportunity for long-term holders. But here's my honest assessment: the confluence of factors, potential Binance listing, insurance fund launch, smart contract deployment, massive short interest, and strong community sentiment, makes the bullish scenario increasingly likely. This feels like a powder keg waiting for a spark. The derivatives data supports this view. When short interest is this heavily skewed, markets have a tendency to move in the opposite direction. Risk management remains crucial here. If you're considering a position, don't go all in at once. Scale into your position, set clear stop losses below $0.085, and keep some dry powder for additional accumulation if we get that bearish scenario. The Kaspa story is far from over. We're sitting at a critical inflection point where multiple catalysts could converge to create the kind of move that generates life-changing returns. But remember, crypto markets are ruthless and unforgiving. What looks like a sure thing can turn against you in minutes. The smart money is positioning now before the crowd catches on. Keep your eyes on that $0.095 level. That's your early warning system for what could be an explosive breakout. And if we start seeing volume pick up as we approach 10 cents, buckle up. That $35 million short squeeze could turn this quiet consolidation into the most talked about move in crypto. What do you think? Are you positioning for the breakout or waiting for a deeper dip? Drop your thoughts in the comments below, smash that like button if this analysis helped you, and make sure you're subscribed with notifications on because when this move happens, you're going to want to know about it first. Disclaimer: this content is for educational and entertainment purposes only, and should not be construed as financial advice. Cryptocurrency investments carry significant risk, including the potential for total loss of capital. Past performance does not guarantee future results. Always conduct your own research and consider consulting with a qualified financial advisor before making any investment decisions. Trading cryptocurrencies can result in substantial losses and is not suitable for all investors. The volatile nature of cryptocurrency markets means prices can fluctuate dramatically in short periods. Never invest more than you can afford to lose.